Hello world, welcome to Farm the Market. On the Stock Trading Journal series, I share with you some of my trades. I do not claim to have the quote-unquote epic strategy that beats the market every time. I just hope it's a good exercise for me, where I get to analyze some of my trades deeply by explaining them to you, and hopefully for you, by looking step by step at examples of real trades, you might find interesting some of the techniques or adjustments I use on my trades. And this might help you in your journey to develop your own trading skills. This time we will take a look into a trade on DBC. Let's get started. DBC is an ETF, the Invesco DB Commodity Index Tracking Fund. This ETF seeks to provide exposure to a variety of commodities, although, as you can see on this table, it's heavily weighted on the energy sector. For more details, review the prospectus. During the summer of last year, I was looking to open a position on DBC. After a nice run-up, it had been consolidating for a while, and I was waiting for an opportunity to get in. Spoiler alert! I didn't open my position at this point, although I was able to get in later. Considering that I didn't trade it right here, I don't have the exact figures or notes logged on my blotter. I'm doing this part of the example mostly by memory, so please bear with me. As you can see in rectangle number 1, there was a false breakout. If I remember correctly, that left me a bit skeptical. So, when the real breakout came, as you can see in rectangle number 2, I was hesitant and didn't pull the trigger. Once I realized the breakout was for real, there was a gap up and most likely I felt I was already late and decided to let it go. Okay, so you might think it's absurd to start reviewing a trade by looking at a quote-unquote no trade, but as I was working on the actual trade part of the video, I remembered I had a missed opportunity before and figured it was worth looking into and might have some interesting information to share. So, let's see. First, what I called a false breakout in rectangle number 1 should have never made me skeptical at all. That's a horrible candle. There was a gap up that created the false breakout and the body of the candle was very small with a bigger upper wick. I should have just disregarded it and didn't let it influence me my next observations at all. In hindsight, in rectangle number 2, I had not 1, not 2, but 3 good opportunities to get into the trade. Of course, the lower the level you get in, the better, but regardless, there was enough there to get in on either of the first 2 green candles. Volume was increasing and the wicks were very small. Even the gap up was viable. Anyway, after that, DBC went up almost 11%. Not a mind-blowing return, but considering it's a diversified ETF, it's a great return for a month or so. Long story short, I missed a good opportunity. It happens. So it goes back to the watch list and wait for another opportunity. After a few weeks, a new consolidation zone starts to form. I wouldn't call it revenge trading or anything like that, but I would admit I was a bit more anxious than usual to finally get an opportunity on DBC. So I played it a bit more aggressive this time. When I identified what looked to me like a nice contracting pattern, I decided to open a position. It looked viable, it would try to fill the last gap, and if it gained enough momentum, even break out of the broader lateral pattern. So, on December 23rd, after waiting almost until the close to make sure the candle's body remained in a good shape, I decided to buy 400 shares of DBC. The last leg up for DBC was about 10%, so I decided a 10% return can be a reasonable target, and therefore placed my stop loss about 3% below, aiming for about a 3-to-1 return risk ratio. Now it's a matter of waiting. A few days go by and DBC almost retests my entry point. Of course, DBC doesn't know and wouldn't care anyway which was my entry point. But anyway, then it goes back up and starts trading sideways again. At this point, I decide to move my stop loss to my entry point and protect my break-even point. Although this is not a stock, where faster moves could be expected, I have given the trade a few days to breathe. It's good to be patient, but also, if it's not going to work, I'd rather get kicked out of the position sooner rather than later. And with the new level, I won't lose any money on the trade if that happens. A couple of weeks go by, and I notice DBC is trending nicely along the 10-day simple moving average. Although intraday it has been breached, no single day close has been below so far. This simplifies the trade. At this point, I decide to just ride the 10-day simple moving average. My original target and fixed stop loss disappear, and now the 10-day SMA leads the way. On February 15, there's a close call, but I just decide to let the trade live another day. Then, February 24th comes by, a day many traders will remember for a while. What a ride it was. With equities gapping down severely at the open, commodities and in particular oil gaps up significantly. Therefore, DBC opens gapping up too. Considering this is a diversified ETF, the gap up was already good enough to take profits. At this point, at the open, I was analyzing if I was going to sell half the position or the whole position already. Considering the geopolitical issues that sparked this spike, I thought it could go even higher during the day, so I decided to wait. Maybe I was just greedy, I don't know, but I decided to wait a little bit. As the session advanced and the market started to reverse, I decided to just sell half of the position. Of course, I wish I would have sold at the top, but that seldom happens. I sold 200 shares at $24.30 and booked a nice profit. The very next day, on February 25th, the 10-day SMA was breached. But as the session advanced, DBC bounced back, and as the close approached, it looked like the 10-day SMA would hold once again. So, I decided to buy back the 200 shares and take the position back to its original size. DBC is so close to the 10-day SMA, which remember is my dynamic stop loss, that I take very little risk. If I'm stopped out in the following days, the loss will be very small. But if the 10-day SMA keeps working, I can still squeeze more out of DBC. The risk-reward relationship is very appealing. On the Stock Trading Journal series, I usually share completed trades. However, I thought this trade had already enough pieces that it would be interesting looking into. Also, I hope the update for this trade takes a long time to come. Maybe it's just wishful thinking. In other words, I hope that the 10-day SMA keeps holding for a while. Until next time. I hope you found this video interesting. Please remember to like and subscribe. Thanks for your time.